U.S. President Trump is now threatening an additional 50% tariffs on China on top of the levies he's already previously imposed.
Now, it comes on the back of Beijing's retaliation to Mr. Trump's reciprocal levies, a 34% duty against all U.S. goods in a tit-for-tat move. Mr. Trump's new threat would put U.S. tariff rates on imports from China to 104%. The American leader also threatening that all talks with Beijing will be terminated.
China calls U.S. moves a selfish act of protectionism and economic bullying. All these come as countries around the world are bracing themselves for U.S. to enact reciprocal tariffs set to take effect in less than 2 days.
And for more, we'll speak now with William Lee. He's the chief economist at the Milken Institute and also a proponent of tariffs in some ways. William, thank you very much for joining us on the show. Let me start by asking you, why are tariffs the right medicine right now? The stock market and businesses apparently disagreeing, and so it would seem right now the cure is worse than the problem, to paraphrase what Donald Trump himself has said before.
Well, Arnold, I believe we have to understand the role of tariffs in the whole package of policies that President Trump was elected to put in place. Let me give you a medical metaphor to extend the one that President Trump was introducing earlier. If you are a cardiologist and discover your patient's got atrial fibrillation, one of the treatments you're going to prescribe is a drug called Coumadin, a blood thinner. But do you realize that Coumadin is a rat poison? And too much rat poison, of course, will kill the patient. And it's up to the cardiologist to decide how the Coumadin can be used to thin the blood to prevent blood clotting, at the same time put together a package of other remedies and therapies to try to get the atrial fibrillation under control so that the patient can get healthy again. Tariffs are exactly like that. No economist likes tariffs. They distort the economy. They have deadweight losses. There are lots of bad things about tariffs, just like rat poison. But there is a role for tariffs in a package of revitalization policies that are designed to lower the size of government, lower government sector, and increase the resources for private sector, reduce regulation, reduce taxes. That's the package that Donald Trump was elected to put in place. And right now, he's put in place the rat poison, right? The tariffs. And I think a lot of people are misconstruing this one instrument as the policy package itself. And I think the concern of the marketplace is that if indeed Donald Trump is going to have to enact the rest of the policy package of lower taxes, lower regulation, and smaller government, he may have been using up so much of his political capital, he won't be able to put in place the rest of the package. So that explains, I think, part of the reason why the markets is becoming very nervous that the agenda that he was elected on, that the markets were so optimistic about, will not be put in place.
Right. William, I agree with you, but I would argue that the use of that rat poison is a very fine line. And right now, given, what's been happening, China threatening a retaliation, Donald Trump himself again, threatening to raise tariffs to 104%. Don't you think it might have tipped into, tipped that line and gone into a place where it could potentially, as we've been talking about, unravel everything that we've become used to over the past few decades, at least since the end of World War II?
That's a great question, Arnold. And let me try to put in perspective. I think when Donald Trump was first elected, he was saying that the global trade system that he tried to negotiate with China as the two largest economies on the planet, to renegotiate it to a new one that's more appropriate for the 21st century. Don't forget, WTO and the system of trade agreements that we have in place right now was designed for the recovery of countries after World War II, when there was only one economy in the world that was healthy and everyone else was trying to recover. Right now, we have very powerful economies in China, in Asia, especially ASEAN, and Europe and South America. So we have rising middle-class economies, and this existing trading system is no longer appropriate and can serve the needs of these many different constituents. And part of the negotiation starts with the two largest economies in the world, China and the United States. And I think Donald Trump is essentially saying, look, let's level the playing field. Let's try to have this notion of reciprocity. But at the same time, let's recognize that it's not just tariffs that's preventing trade from being free trade. It's non-tariff barriers like quotas and legal restrictions and all sorts of rules and regulations and regulatory requirements that prevent companies from selling in one country or the other. Those have to be dealt with. And that's why I think the effective tariff rate that he calculated for all these countries seems so high, because it combines all these non-tariff barriers. This system is broken. And I think Donald Trump is seeing this as the one opportunity, probably the only opportunity that we have to restructure the global trade system for the benefit of the new economic structure that we are now faced with.
William, just to use your rat poison analogy again, I mean, you said it, too much will kill the patient. So wondering, isn't there a risk of over-relying on tariffs? And how would you address the potential negative consequences? We're talking rising consumer prices, risk of isolating U.S. from international markets, or a possibility of already retaliatory actions from trading partners.
That's a great question. In fact, I've been commenting in private to many of the Milken associates that I talk to that President Trump loves rat poison or tariffs so much, he's over-relying on its power to try to get a lot of other things done, whether it's immigration reform or controlling the illegal flow of fentanyl across our borders, or in this case, talking to China and trying to bring them to the bargaining table with a bigger set of objectives than just our bilateral trade, really restructuring the trading system. And I think you're right to say that there's an over-reliance on tariffs. And as far as the inflationary impact is concerned, I think, well, let me address that. So many people say that tariffs will raise inflation, but tariffs will raise prices of imports, yes. But again, whether those prices stick or not is the question. If I tell you that I've got a car to sell that I'm going to charge $100,000, well, if it's maybe a Rolls Royce, you think it's a bargain. But if it's a cheap little Toyota that like mine, you'll think, my God, I'm not going to pay $100,000 for it. It's demand side that determines where the equilibrium price will be. So the car makers and the importers can ask whatever they want and say, I want to mark up prices to make up for the tariff. But it depends on where the marketplace is. The reason why the supply chain disruptions were so inflationary back in the Biden administration was that because also a stimulus package was given to people to give them extra money to spend, and they can pay whatever prices were asked. Right now, people don't have the stimulus package, and they're going to be resistant to higher price changes. They're going to look for alternative products which are domestically made, and I don't think a lot of these price changes will stick.
Okay, William, we'll take your point about, the COVID cost, if you like, price hikes. But I want to ask you about recession fears as well. They have risen, but you say that the tariffs won't cause a recession. How come?
Well, I think the recession fears are more about anxiety over the uncertainty of policy and direction of policy. A lot of the wording of when you ask people, what are you afraid of? Oh, I'm so afraid of the tariff policy. But let's remember, only 14% of the U.S. economy are imports. And when you import more, it's a drag on GDP. So if you're actually able to switch expenditures from imports to domestically produced goods, you actually boost GDP. So reducing imports is actually a way of boosting GDP, but it's the anxiety and uncertainty over the type of policies that are being used and whether or not the rest of the MAGA agenda will be put in place. That is the source of the unrest and causes people to freeze up their plans and freeze up spending, investment in particular. So it's not the tariffs per se that's the source of the uncertainty and source of the recession fears. It's the policy package and the success and efficacy of being able to put in place the MAGA agenda. So I think that's where the recession fears are really stemming from.
Okay. Well, William, assuming you are correct and the U.S. economy is relatively shielded, if you like, what about the global economy, especially for countries dependent, on the United States for their exports? I mean, there's a high chance right now that, countries like Vietnam, for example, could go into a recession. Is that not going to have, some sort of flow-through effects to the U.S. as well eventually?
Great question, Arnold. Again, you're very insightful in terms of the type of issues that I think are really important. And I think one of the things that you have to remember is that the many countries, especially in Asia, the newly emerging countries like Vietnam, especially now Cambodia, are really proxies for China-produced products. The rules are that Cambodia, for example, has got to have at least 40% value added in domestic content to be called made in Cambodia. And similar domestic content rules are there for Vietnam and the rest of ASEAN. But in many instances, I think President Trump is concerned that there isn't that true value added put in place domestically in Cambodia and Vietnam, and that it's just a transshipment point. So I think that's really a way of saying, I'm putting these high tariffs on the China proxies because I want you to come to the bargaining table and show me that you're not. And again, everything is negotiable as far as Donald Trump is concerned, I believe. And these tariffs are put up there high enough to make it a serious discussion. So I think the global trading system will actually benefit if we are able to restructure the WTO post-World War II framework into a new framework that's appropriate for the 21st century. And we start with negotiations between the United States and China. But by the way, one nice thing about President Trump's negotiating style is that he's much more bilaterally and small group oriented. He's not the kind of person that, like President Biden, wants to get together 20 or 30 countries into a big negotiating round. And what you wind up with, as you political scientists out there know, is called the tyranny of the minority. This one country can be a holdout to prevent agreement that everyone else agrees to. So I think the bilateral and small group negotiations that Donald Trump is trying to champion, and he's got 70 countries asking to come negotiate now, the bilateral country negotiations will be much more efficient and much more flexible and much more adaptable in the sense of once you have an agreement, you can always change the agreement because it's a bilateral agreement.
Okay, understood. We will have to end the conversation for now. William, thank you so much for talking to us here on Asia First. William Lee, Chief Economist at the Milken Institute.